Guys, hello everyone and welcome back to the channel. In today's video, we are going to discuss the latest developments in XAUUSD after gold experienced a very strong reversal from the 460 area and dropped toward 40,380. Within a relatively short period of time, gold fell by more than 130 points. This tells us that selling pressure around the recent high has been extremely strong, and the short-term market structure has changed significantly. The most important question right now is, will gold continue falling toward the support zone between 4C10 and 4C525? Or will buyers step back into the market around this area and create a short-term recovery? In this video, I will break down the overall market structure, the resistance zones where we may look for selling opportunities, the support areas where a short-term buy could develop, and finally two specific scenarios for the next trading session. Let's get started. Guys, first, let's review the market context beginning around the 17th on the chart. After gold formed a low near 30,970, the market produced its first change of character, or chose HH, around the 40C5 to 4C1 cent area. Following that signal, buyers gradually took control of the market. Price continued to form higher highs and higher lows, while producing several break of structure signals. We saw structural breaks around 4B25, 4, SOVD 188, and finally around 461 140. The important point is that each time price broke above a previous high, it created a relatively strong impulsive move. This suggests that the bullish momentum was not driven only by retail buying. There were also signs of larger institutional participation. However, when price reached the 14,115.5 area, the market began to behave very differently. This was a major rejection zone. Gold briefly pushed above 4,460, but it could not hold that level and was quickly sold back down. In other words, the previous bullish trend was still very clear, but buyers encountered a major supply zone near the top. Guys, after being rejected from the 4,155 to 4,165 zone, price began forming a series of lower highs. Initially, the market still produced some relatively strong recovery attempts. However, none of those rebounds managed to return to the previous high price, then broke below the recent low around 405, creating a bearish change of character. This is the most important signal on the current chart. Before the 4105 level was broken, the decline could still have been viewed as a normal correction within the broader bullish trend. However, once that structural low was broken by a strong bearish candle, the probability of a short-term bearish reversal increased significantly. Following the CoCH, price barely produced a meaningful pullback. It continued falling from around 4,100 through 4,990 and 4,860, and it is now trading near 4,000. This tells us that sellers are currently in control and that buyers who entered at higher prices may be closing their positions. However, at the current price, I do not think chasing another sell position is attractive. The reason is that gold has already fallen a very long distance and is now approaching an important support zone. Selling immediately around 4,000 would offer a much less favorable risk-reward ratio. Guys, for potential selling opportunities, there are three areas we should monitor. The nearest resistance zone is located between approximately 4,455 and 4,555. This is the area where price recently consolidated before continuing lower toward 4,030. If gold retraces into this zone but fails to close above it on the M15 timeframe, the probability of another move lower would remain relatively high. However, because this is only the nearest resistance area, traders should wait for additional confirmation on the M5 or M1 timeframe. For example, price could sweep a short-term high form a rejection candle and then break a lower timeframe structural low. The second selling area is the bearish order block between approximately 4,112. This is a more important supply zone because it is located around the area where the previous bullish structure was broken. If price produces a deeper retracement into this area and then confirms another bearish reversal, it could offer a more attractive risk to reward setup. The first downside target could be around forcing 60, followed by forcing 30, and then the deeper support zone between forcing 15 and forcing 515 and forcing 550. The final resistance area is the major rejection zone between forcing 150 minus forcing 155. We immediately return to this area. To summarize, the current strategy is not to chase a sell position around 4 sourcing trader. A more reasonable approach is to wait for price to retrace or resistance, observe the reaction, and enter only after the bearish structure is confirmed again. From an M15 perspective, the short-term structure has turned bearish following the break below 42105. The area between approximately 42105 and 424 has now become a bearish order block. If price retraces into this area, sellers may return to the market. However, when we look at the entire bullish move from 329972, 4165, price 65, price is now returning toward the origin of the latest major upward expansion. Therefore, we need to separate two different ideas. In the short term, sellers are in control. However, around the 422475 area, the market may produce a relatively strong technical rebound. The price action on the chart also reflects the broader market environment. On July 22, gold climbed to its highest level in approximately 2 weeks, near 465, supported by a weaker US dollar and technical buying. On July 23, gold reversed and fell by more than 2% as the US dollar and Treasury yields strengthened. Oil prices also moved above $100, increasing concerns about inflation and the possibility that monetary policy could remain restrictive. During the upcoming US session, traders will also be watching preliminary US manufacturing and services PMI data, as well as new home sales. These releases could generate significant volatility in gold, the US dollar, and Treasury yields. For that reason, traders should be especially cautious around the scheduled release times. On the downside, the first support area is located between approximately 4.01 and 4.19. On the chart, this area contains a fair value gap created during the previous strong bullish expansion. A fair value gap is an area where price may return to rebalance an inefficiency. However, the presence of an FVG does not guarantee that price will reverse. The more important support zone, in my opinion, is located between approximately 4005 and 410. This area contains a combination of an order block, liquidity, and the timing zone marked on the chart. It can be viewed as the buyer's final major defensive area within the hard Henry 19 ratio, where new 5 area, or briefly sweep below it. Second, after taking liquidity, price needs to recover quickly and move back above 410. Third, the M1 or M5 timeframe should produce a bullish change of character supported by a strong impulsive move. Without those confirmations, traders should not buy simply because price has reached a support zone. If a bullish confirmation appears, the short-term upside targets could be 4.20, 4.3, and then the resistance zone between 4.45 and 4.3, and then the resistance zone between 4.35, and then the whole system fight for the buying idea. If price closes clearly below this area, the support structure may have failed, and the probability of a W. Now let's move on to the two main scenarios. Scenario 1. Price continues lower. This is currently my preferred short-term scenario because the M15 structure remains bearish. Under this scenario, price may retrace toward the 4045 to 4005 area, get rejected, and then continue moving lower. The first downside target would be the fair value gap around 4015. The next target would be the order block and liquidity zone between 4.0105 and 555. Once price reaches this area, traders should observe the reaction rather than continue chasing sell positions. If price breaks below 4005 and closes an M15 candle below 3998, the buying zone will be invalidated. Gold could then continue toward 3,990.80 or potentially revisit the previous low around 3,970 scenario. 2. Price sweeps liquidity and reverses higher. In the alternative scenario, price could fall into the 4,002-4,005 area and sweep the liquidity below traders who entered long too early. After that liquidity sweep, price would need to reclaim the 40110 level quickly. If the market then produces a strong bullish expansion and moves back above 4,020, we could see a recovery toward 4,030 and then 4,045 to 4,155. If buyers manage to break above 4,455, the next upside targets could be 4,880 and the bearish order block between 4,155 and 4,112. However, traders should remember that a move from 455 to 460 would still be considered a corrective rebound within the current bearish structure. To confirm that the bullish trend has genuinely returned, gold would need to reclaim the 4C112 area, hold above it, and form a higher low. Only then would the market have a stronger foundation for another move toward 44140 and the major rejection zone between 4C135 and 4131.